Like I said, I won't do it for too long today. You guys go and enjoy your Christmas Eve. But let's go over the majors. Let's go over USDT, dominance, Dixie, all of that. Top 10, few requests. I'll call it there. Okay, so let's begin with Dixie first, because this is something I've been mentioning for a few months now. That Dixie above this, if we get above this, that's pretty bullish for the Dixie, right? So last stream we did last week, we were looking at this candle. So if we go to the daily, right over here, right? So Tuesday last week we were over here, and what I was saying last week was, look, if you can hold above the 0.382, right, keep closing above this, expect to push to the upside, right? That's what we were talking about last week. We didn't close below that even after Tuesday, right? We broke up, consolidated above, and then we just got another push up. So now the targets we were talking about before, right? 108.722, that's the first area I'm looking at. Above that, 109.623 to 110, right? So I want to see what kind of reaction we get going here. And you can see historically it's also a zone of support and resistance, right? We've got fib confluence here as well. But Dixie is currently trying to break above, and technically already has broken above its consolidation range it's been in since 2022, right? You can see consolidating here in 2022, trying to break to the upside. The question is this going to be a big fake out, or is this actually going to propel the Dixie much higher? That is yet to be seen, right? But I mean, you've taken the external liquidity staying above, so maybe one more drive up and then, you know, absolutely nuke it down. Could happen, who knows? But for now, Dixie definitely looks bullish. Right? There's nothing bearish about this at all. You broke out, retested your trend line. We looked at this as it developed. Then you retested your true range highs. We looked at that as it developed as well. Then you confirmed that you are not going back below the 382, which is what we looked at last week. And now you've got your close above and currently building above your external liquidity all the way from November of 2022. 2 years down the line, right? So currently on Dixie, in terms of buyer seller zones, write this here. Locally speaking, if you can stay above 108.177, then your resistance is going to come in between 108.541 to 108.722, like I said, right? You flip that, then you're going to just beeline it straight up towards 109. So locally speaking, this is your resistance now, right? If you can get above Dixie carries on to the upside. If you SFP this, then perhaps, you know, you get that pullback down. Maybe you go back into the range, right? But right now, the local resistance you're dealing with before you get that nice spike up on the Dixie towards 109 to 110 is this zone between 108.541 to 108.722. That's what we're looking at for Dixie. USDT dominance. Let me, what's going on over here? 1 second. What is that? What? Okay, it must have been. Is this? No, it's me. Let me get off log. That's why it was like that. There we go. There. Okay. So, USDT dominance, right? So again, what we looked at last week, Tuesday, the candle was over here, right here. So we're saying, okay, USDT dominance is currently at the lows. We're not going to be surprised if it bounces, because the whole thesis for me saying that is this red line, right? This, the way I described it last week was this. So this blue is your most crowded, most confluential area in terms of this macro trend that you've been in. But in terms of your extreme range lows, following the area where most of the actions happened, is this red line, right? Why am I saying that? Because that is just that low to that low, the two range extremes you've had that kickstarted this trend. So what we were talking about last week was, look, as long as you're above this, expect some more chop here, right? Which is just going to send Bitcoin sideways, and then also going to go up and go down, go up and go down, depending on Bitcoin dominance. So we've had the lows when we looked at this last week. We've had a nice pump up this week. Again, no surprise, but at the end of the day, you are not currently reclaiming areas that you should be. You're below 4.35%. You're below your blue line. You're below this massive red box here. You're below 4.94. There is nothing bullish about the USDT dominance chart right now. Okay, nothing bullish about this. Still expecting this some more chop, right? So euphoria comes in, like I said, when you lose this red trend. If you do that, then ultimate target, I wouldn't be surprised if we got as low as 1%. We don't have to get there, but you have an absolutely extreme trend right over there that you could tap into, right? If not, you can look for, you know, fifth speed resistance fans, pitch fans, just key external liquidities, right? Just look for those and just see where buys step in for this. Basically, there's no point in trying to predict a bottom You can just give yourself some higher time frame key levels and then wait to see which key level is actually giving you the reaction you want to remain bullish or flip bearish, so on and so forth, right? But right now, again, this is just that's obviously a nice candle on the weekly, right? That's a bullish engulfing candle. So if you do put a high low in here, you might have a continuation to climb back to the upside, right, to 4.94%, maybe back even towards 5.53%. But until it happens, at the end of the day, what's happening right now in terms of price action is a very clear rejection from an area that has literally been support up until November, right? So you're trying to flip that into resistance. So again, if you see a reclaim of this zone, right, something like this, then that would be bullish for USDT, and that would be very bearish for crypto, because if this goes up, again, that's going to represent money flowing into the stable coin rather than your actual crypto projects, right? But that's not what we're seeing yet. And until it happens, it's just ideas whether we go higher or lower, right? So again, we went up, we hit the resistance zone we've had marked down, and then we've had a rejection. We tried to close above the 0.4.35, which is succeeded in, but then confirmation right now is sending us lower. So let's see how the week closes. We've got 5 days and 6 hours. Ideally, I want this to be a bearish engulfing candle. If you want quarter one, quarter two to be like, bullish going on, I want this to be like a bearish engulfing candle. A couple more chop to the underside here and then just send it down. But, if this carries on to the upside, then we can act accordingly from next week, right? But that's that. Huge, sell orders coming in here basically, right? So we're just getting a reaction off of that. But that trend is still to the downside, right? Lower highs, lower lows, lower highs, lower lows, lower high, lower low. The trend hasn't flipped bullish or anything on weekly yet. So that's USDT dominance. Again, I want a bearish engulfing candle this week to keep momentum on our side. If not, expect some more chop before we go down, right? But if we can close out the week with a bearish engulfing candle on USDT dominance, that's going to correlate with Bitcoin. If we quickly look at Bitcoin now, actually we'll look at that in a minute. Let's look at USDT dominance plus USDC. Again, we hit a key area. We hit the 87886. We're not surprised it bounced from here, right? But your trend is still to the downside. You're still making lower highs and lower lows. If we can go and again, if you put a higher low in here, locally speaking, and then carry on grinding up, then there's a bit more room for concern, right? But for now, all we've had is a weekly reaction to a key area. By no means have we captured any important levels. By no means have we, flipped trend or anything like this. Not yet, right? Same story with USDT dominance and USDT plus USDC dominance, basically. Bitcoin dominance, a lot of zones I've got marked on. So let me just clear all that out to begin with, so you don't get confused there, and there. Okay, so this move up, right, on the daily, if you take a look. So basically, what did we do last week? We went up and bearishly retested the 0.382, right? This was one of the scenarios we were talking about last week. Because last week we were saying if you can get above the 3.4, the first area you're looking at is 58.76%, basically, right there. But if you can get above that, then the next area we're looking at is somewhere between that 5.95, the 382, and the top of this gray zone. Right, so we hit the 0.382, and then we closed below the mid of the zone, and then we're getting a follow through back to the downside for now. Again, 5 days left, a lot can happen. Let's see how the weekly closes. That's the important thing. But if this stays like this, if you confirm this to be SFP and you get a bearish engulfing candle on this again, which is what I want, a bearish engulfing candle on this, then that'd be beautiful, because you can with more confidence call for further continuation to the downside, right? Which is going to correlate really nicely with your alt season, like your alts, not alt season, but alts catching the bids, basically. So at the end of the day, for us to be bullish on Bitcoin dominance, very key area from history, we need to reclaim these areas back into support, right? 5.786 going into that 59.95. You can go, if you go and reclaim this into support, that'll be looking at 62.51 first, and then somewhere around basically like 65, and then 67.56, right? Those would be in the table if you can now go and flip this back into support. If you cannot do that and you keep doing this, proving that sellers are in control every time you go and hit this zone, then that's more reason to expect downside on Bitcoin dominance, not upside. So that's Bitcoin dominance. Ethereum dominance, we don't really need to look at it, right? So you're below your zone, you need to go and recapture this, but there's a lot of selling that's been going on aggressively over the weeks. I think this is close to a bottom. Could be famous last words, but we'll see, right? This is all happening at very key areas. I want a reclaim here, and then for us to go higher. But it's not really time to look at Ethereum dominance yet. I want to see Ethereum really catching bids. There'll be like a month or something, right, where Ethereum dominance comes in handy. And when you see Ethereum clearly catching bids, making all-time highs, and Ethereum's the one the money's going into, Total 2 is taking the lead, then you'll know it's time to look at Ethereum dominance as well, right? Because then you need to know if you could rotate into some alts, should it be in ETH or should it be in something that looks ready to break out against ETH, right? Same way you would look at Bitcoin pairings, you can look at Ethereum pairings. But you're going to do that by looking at Ethereum dominance. It's not time yet. Total 1. So we hit the ABCD 2.0, ABCD 1.272, right? We did that last week. We saw it. We hit that level. We hit that. We were literally at that level last stream we did. And again, aggressive buying coming in for this, right? So basically aggressive volume coming in over here. But again, SFPs from the key area and a close below, right? So we're not surprised we're getting this rejection. You were literally at the 2.0 of this ABCD right over here. And you were at the 1.272 of that macro 0.786 ABCD right over there, right? Very, very confluential area. We looked at this a couple weeks ago as well. I'll put this down. We've hit that zone now, and then we've rejected. But at the end of the day, you're above your previous all-time highs. If you're above this, there is nothing to be bearish about. I would love for us to actually get back and close above this trend line now, right? Why am I calling this a trend line? Well, there's a parallel channel I've got down, this low to this low, with that being the high, because then you can say this is deviation. This is your true high with confirmation, right? You've got a distributive structure going on, smiley face. I don't want this to put in an inverted smiley face over here like this, right? Because then you could expect maybe one more drive down, something like this, and then maybe do that. Elongate the move up a bit, right? Maybe dump towards New Year and then go up, maybe like like end of January-ish, right? If this scenario were to play out, depending on how long it took. But if you can just go above and get above this, then all we need to do is flip this into support, and then like we looked at last week, you've got this crab, right? You've got this deep crab over here as a target, right? 886, basically an 886. So your 1.618 is going to lie within that trend-based extension we looked at, right within this zone. This is your this is your shallow retracement. This is your shallow golden pocket zone in trend-based extension terms. We looked at it last week. If I put it on, actually, it's this trend here, right? A, B, C. And it's got confluence with a fib retracement 1.618 extension as well. This would be a nice target if we were to flip 3.72 to 3.63 trillion into support. You flip that, you're going up here. Nothing's changed in that regard, right? Ultimately, as long as you're above all-time highs, you're just consolidating at a new range. You're going to put in a new significant area before going higher, which will act as support in the future, right? We're just building out more data, more volume in this area over time. That's all that's happening. Your range right now is between basically this zone and previous all-time highs, 3.01 trillion. Right? You can literally think of this as your current range. Here is your range right now. What are you doing? Right, if I was to turn these brushes off, right, you can see there. There's your range. What we're doing right now is we are rejecting off the mid of the range. Right? If we close the week below this level, below the mid, right, then I expect a drop down once again. Maybe take these lows out, right? Do something like this and then push higher. If you can close the mid above this range, then I expect us to go up towards the highs, maybe even raid it, put a new high in, right? And then from there, either flip and go or come back down again, chop some more. We'll talk about that scenario once it comes to play out. But in terms of where we're rejecting from right now, for the current new range we're putting in, right? The reason I'm calling it a range is once price broke above here, you're now putting in a new significant area on the chart that's not been here before. This is a new trading range now, right? You are currently at the mid of this trading range. If you use it as resistance, lower. If you can flip it to support, higher, right? Very simple. That's total 1. Total 2, big rejection of the 1.618 of the ABCD. We went to flip that 3-month seller zone into support, right? So a flip of this we've been talking about for a while. We finally got it last week. Take a look. So on Tuesday last week, we were over here. We got that close below, and then so we were talking about last week. We're saying you could go down to the 3-month seller zone, stop out this wick. As long as you hold this, there's nothing bearish, right? Again, you've held that key level. You're looking like you're wanting to go back to the upside, right? So you have a channel here. You could probably put this as a lower time frame channel, but that's a channel there. Let me see. It's probably nicer to do this on the 4 hours, to be honest. Yeah, one sec. From here to over here to there we go, right? You can see you pretty much had the smiley face on the diagonal, right? Support, radon liquidity, high volume sell candle, which was immediately challenged again, went above, came back down to reconfirm. So you have a horizontal smiley face and also a diagonal smiley face. So very accumulative structure coming in at the bottom of this parallel channel. Above the mid, you stay above here, going back towards this red box, right back to range high as you go. So total 2 looks absolutely great, right? Which is why I think ETH season is not far off. Total 2 looks very, very good. So again, next thing to do for us on the higher time frame is rate the highs, flip this to support. You do that, macro ABCD. That's your target, 2.06 trillion. And then maybe we can plot some harmonics to actually look for higher targets after that as well, right? But total 2 looks very, very good here, right? Don't get it twisted. It looks really, really good. Total 3, rated all-time highs, came down. You flip the 2021 12-month seller zone low, 873.62 billion into support, right? Same thing as you did over here. Flip that to support, and now you're trying to work your way back above the 1.618 of this AB equals CD. If you do something like this, you will have a cumulative structure being put in, and then I would look for a rate of this highs, maybe even go towards, like I said, 1.36 trillion or something like this, but higher nonetheless you'd be looking for, right? If you get below the 1.618 again though, so you can again think of this like a zone, from this to here basically, right? Think of this like, again, just there. Think of that like a zone. If you cannot get above this white box, then you threaten inverse structure, right? About that I mean inverse smiley faces. So initial resistance here, radon liquidity, and then reconfirmation of resistance. You'd be looking for lower if that happened, right? Maybe one more flush down before reclaim and higher. But that's the reason, all the more reason why we should want for this level to be flipped into support, right? Because again, if total 3 flips into supports here, we're expecting higher on this, 1.36 trillion being my target. We've already rated all-time highs once. So that's total 3. Total others, if we take a look at that. So you lost that very, very important red box, right? We lost that red box. So you came, again, if you lose that, what we're saying is this right here is a range, right? So again, if I take from here to here, there we go. So this is your one of your trading ranges. You've got a trading range below, you've got a trading range here, you've got a trading range higher. You lost the top of the range, you came down, held the mid of support, which is why you're coming back up to test the highs, right? Once again, we need this to flip into support, okay? Otherwise, you threaten putting in distributive structure that could take you to the lows of the range again before going higher. We need this to be flipped into support. If this doesn't get flipped to support, again, you know, you've got mid to support again, but I don't expect the mid to hold again if we go there, right? It could, we don't know, but if it doesn't, then you know, the lows is where I'd be expecting for support to really come in. Flip this to support though, everything's fine. You're back within the high range. You're looking at this red box. Ultimately, again, 1.13, right? With the 886 here, basically 1.13 is your reciprocal ratio. 547.5 billion is your ultimate target on this. The only question is, when do we get it, right? That's literally it. When do we get it? Do we get some more chop before we go higher? Or do they just give it to us like, you know, ASAP? That's what we need to find out. And that's what this weekly close is going to tell us. This weekly close is going to be important in terms of momentum. For us to hold our momentum, which is the momentum to the upside, we need to reclaim these areas that we've lost. If you don't let me flip it to resistance, momentum is going to fizzle out. Sellers are going to take control back here once again. And then they can, you know, basically bully the price down some more. Right, momentum is not going to be on our side locally. On the higher time frame, like if you're looking, like, you know, if you're thinking weeks in advance, you're thinking months down the line, then eventually, of course, you will catch up, you will reclaim again. But in terms of just keeping this, you know, week to week momentum up, we need this to flip. You've had a cooling off period after that big move up. Let's, you know, let buy step in again and go higher. If they fail here, a couple more weeks of chopping back to the downside is what I'd expect. So that is others, and last but not least, we've got Total DeFi. Total DeFi retested the B points of the harmonic, right? You can see that. You had a buyer-seller zone over here as well, right over there, area where sellers and buyers were both active. Flipped that into support, showed buyer strength there now. Closed above the B point, or not closed, yes, you closed above the B point, and now you're making a move back up. Again, you're closing below the 0.5 of this seller zone, right? What we have here is a seller zone. Actually, no, sorry, this is a buy zone. You're treating, what we're saying here, high volume sell candle on Total DeFi, right? High volume sell candle on the weekly. We have an area where buyers took control back from the sellers, right? This was back in 9th of December 2024. So these three are your key support levels, right? But if you now have sellers taking control of what was an area where buyers took control, that is obviously not bullish. We need to be taking the mid back into support. You do that, again, take the D point and then go up over here, rate the highs, go to the ABCD. All of that's not that far off. But if you turn this to resistance, then again, maybe one more chop down before going higher. Right? All we can do, go off what the price action is telling us. Price action right now is telling us we're rejecting off that 132.64 billion we had. Right? We marked this down last week. We're rejecting off it currently. We need this to go and flip into support. And then alts can go in their merry way without any disturbance, right? If we don't, then alts are going to be struggling, or rather, maybe some more red on alts before we go higher. So many things, like I said, are make or break levels, even in terms of macro, right? So others, dominance, we looked at this. We raided the lows, right? This range low over here, we raided it, but we've maintained the close, right? We closed just below, but then now we're trying to undo some of the damage that the sellers did last week. Again, if you can close above the 0.5, what used to be a buy zone, that's fine, because then any pullbacks, buyers have a chance to exert control at this area again. If you close below, you're not looking for pullbacks. Sellers are already exerting control, so then buyers need to do extra work to break above and then retest it, right? So we want to close above, because then all we're looking for is a retest and then higher. Right, but for now, this looks fine. The only thing is, you do have, again, a buyer and a seller zone next to each other here. The mid of that is what you're rejecting off of. So basically, between 10.77 to 10.97%, right? This area, if I was to do this, this is the zone that you need to flip into support where you currently are. You flip this into support, you have, very weak resistance at 11.24. I'd expect higher, honestly. On others dominance, I'd expect back towards range high as you go, right? You've took out the last lower high that led to that lower low. You put a higher low in, right? Massive shakeout candle. What was once resistance is being treated as supports again, which used to be supports in history. I'd expect higher, but we need to, like I said, close above this to this, between this dotted white line to this dashed white line, between the 0.5 to this 0.5 here, between 10.99, basically between 11% to 10.77%. That zone needs to be regarded as support, not resistance. So that's all the totals, and there's nothing bearish yet, right? So what happens this week could give us local bearish signals going into next week and beyond, because again, the reason I was saying there's no point being overly bearish last week, right, before we got this flush out, is because there was nothing last week where price action actually indicated that we're getting ready to flush, right? All you had was price grinding higher and higher and higher. There was no technical damage done to any chart whatsoever, right? So now we can see we're back below key supports, like we've been looking at, right? Like we looked at total 1. We're back below key supports here, right? And we're pumping into those key. Now, for now, what is resistance, right? What was support last week has now flipped to resistance. If sellers can actually show control here now, you've got, on the higher time frame, confirmation that the structure shifted, right? Then you can take conviction short / conviction bets that price is going to go lower. That's much better in my opinion than opening up 10 different shorts, just trying to short on the way up, 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 and eventually, look at this short I caught, massive P&L, but you stopped out 15 times on the way up or something, right? So now you're gonna have a higher probabilistic chance of actually catching a nice hedge at a lower risk to yourself, based on structure as well, right? So keep it in mind, keep that in mind, keep these key levels in mind when you're looking at the weekly close that is coming up. Because depending on which side shows you an edge is going to be telling you, should you open up any hedge shorts if you're not already in some, or should you just sit on your hands for now if you're in spot especially, and just wait for the chop to play itself out, right? But that is all the total charts. So now let's look at BTC index. There we go. Right, so what has BTC been doing? Let me hide this first, 1 second. There we go. Okay, so we can see what's happening here. We have a daily over here where we have this. For those of you unfamiliar with this structure, this is a textbook supply zone. Okay, this is a liquidity pocket. We have a daily liquidity pocket right over here. Where is it? 1 sec here. Daily liquidity pocket right over here. That used to be resistance, right? So this was a supply zone, used to be resistance. We broke above, got above, but on the retest of this said level here now, right? On this particular retest here, so if you go to the weekly, your breakout, you had one retest, and the confirmation has taken us back below, right? Not what you want to see. So you had a successful retest on the weekly, but the confirmation didn't give you any follow through. So we're now pumping back into this area, right? And what we're now seeing is, again, either one or two things could happen. Number one, buyers go and either close above or close above the mid. Both of those things for me would be pretty bullish, right? Because if that happened next week, you know, you have the whole lower half of this zone to act as supports, which has a higher chance of bouncing you higher in the weeks and the days to come after the weekly close. But if the weekly close is below the mid, especially, okay, not even the weekly, like, you know, even if you start seeing daily, right, you get a daily price action, you start seeing 4-hour closes below the mid, right, SFPs, and then you get one daily candle close below the mid, you now have reasons to try and attempt to hedge over here, because then you threaten putting in exactly what I've been talking about so far, the inverted smiley face, right? So distributive structure, initial offloading, pump the price back up, right? And then offload on people here, confirm this to be deviation, confirm it to be a liquidity grab, aggressive people are trapped, they generate more liquidity for the market makers, right? And then reconfirm what was actually the true resistance to be resistance again, and then just send it lower, right? So here is your line in the sand. You have a daily seller zone right over here. Okay, if you're looking at the daily, you have a daily seller zone right over here. That is what we're rejecting off of. If you get a daily close below here, you can look for a low risk short, right? Whatever the daily close is, you can look for a low risk short with, you know, you can literally tell yourself, as soon as you start seeing like 1 hour flips at this level, you get out of this short, right? Hopefully people are in spot bags, they are in longs, right? So a low risk short like this, even if it gets stopped out, is nothing to even think about, right? Because this is a risk free short to anyone that's holding any spot from the lows or any long. You're trying to simply hedge it, right? You're simply hedging the fact that this is now a high risk to reward opportunity for you to protect yourself against any continued downside with structure on your side. If you then start getting 1 hour, 4 hour closes above, right, what can happen is you can then maybe grind back up and put in the inverted smiley face a bit higher. The inverted smiley face could come in somewhere over around the 2.24 instead, right? Maybe something like this, and then go lower, right? So you now, if we flip the 2.24 back into support, then there's reason to, you know, look for 104 again, and then flip down to support, then we can go towards 109. But as long as you're below this white box here, right, and especially if you get a daily close below this, you have reason to hedge a short. Okay, you definitely have reason to hedge a short. Again, just because there's confirmation here in terms of price action from history, right? Not the, obviously not like, you know, years and years of data, but still area where buyers and sellers were active, right? That sellers were active here in the past, buyers took control, and now sellers attempt to take control back, right? So again, if you get a daily close below, do not, you know, hesitate to open a hedge. You don't have to, I'm not saying close all your longs, close your spot bag, go all in on a BTC short. Just take a hedge that you can, you know, profit on if you do go down to the downside. You're simply trying to protect yourself against any more downside. That's the whole purpose of a hedge. Okay, structure will be on your side if you get a daily close below here. That's what I'm trying to say. So that is BTC. On the locally now, why did we bounce from where we did? So if you go to the 4 hours, and I open this up, so I couldn't give this in last week's stream, of course, because in last week's stream the structure hadn't been put in yet, right? I don't think it has anyway. No, it definitely hadn't been put in yet. But what we do have here is now a lower time frame ABCD, right? So like the targets I've been giving you on the higher time frame, look at the 4 hours. A, B, C, right there, 382. Remember 382, 2.24, 2.618, and 3.618. Those are your three targets, right? So we bounced off the 2.618, a double bottom at the 2.618, and then that's given us this high volume sell candle. This is basically like, look, low volume is Christmas Eve, right? A low volume liquidity run. That's basically what this is, right? So don't be longing into this, not until we flip some key levels into support. If you were in the red and you're going back break even, definitely go risk free, right? If you catch caught any longs, definitely take some profits. But this daily close is going to dictate whether maybe we go back and rate this, right? Maybe we go to 3.618 before we go higher, right? But ultimately, if you close below this white box, right, you can either go all in, layer in, up to you. Maybe you want to go 50% in if you get a close below, and 50% in if you then confirm the mid of this yellow box as resistance. You can layer in that way, right? You know, there's multiple ways you can take a trade. There's multiple ways you can enter a trade. There's multiple ways you can take out of a trade. But the triggers are the same. Close below white box and confirmation of the yellow line, this mid here of this daily supply zone as resistance, right? Two confirmations. So you still have 89218 is still a valid target because this ABCD is still in play, right? You could go lose the 2.618. Maybe you do this, right? Maybe you go here, do this, and then do this, and then go higher, right? Sometime at the start of January. Very, very possible, right? You literally put in a cumulative structure here, perhaps. Maybe you go even lower. Who knows? We'll have to see. But there is targets to the downside, right? And you are at an area where you can definitely manage a risk. You could literally try and take a short off a 4-hour close. I'm not joking. You can, if you do it off a 4-hour without the daily, I wouldn't go full position size yet. So maybe let's say you go 40% in of your position size on the short at this 4-hour close. If it closes like this below the white box, and then just cut it if you close the next 4-hour candle above this white box, right? But if you don't close the next 4-hour candle above this white box, then wait for the daily to close and then layer in with the remaining 60% of whatever it is once the daily confirms that close below the white box as well. Like I said, multiple ways you can enter a trade, guys. Okay, don't be one-dimensional with this. Multiple ways you can do this. Just do what's best for you, what helps you not paper hand, what helps you not be emotional. Okay, positioning is very, very important. It's an art. But 89k is a valid target now, right? If we do get further continuation to the downside, don't be surprised if we do get 89k before higher. Depends on this close. Again, like I'm giving you a very tight zone here between this dotted yellow line to this white box. Very tight zone, right? Buy show edge here, you go higher. Seller show an edge here, you go lower. Okay? High risk to reward area. Let me quickly check the chat. Right, there you go. Let's look at Ethereum. ETH, nice bounce, very nice bounce. You front ran the historical price range mid over here, but that's not a surprise. It's not really a front run when you had valid reasons to do so. That valid reason in this case being a daily demand zone right there. Okay, that's a textbook demand zone. Impulse, consolidation, impulse back up. You hit the liquidity pocket here, right? So you hit the lower side of the liquidity pocket, daily order block, you hit that, front ran the historical price range mid, reconfirm the top of the liquidity pocket to be support. Now you're on your way back up. Again, for Ethereum now, right? So we had there we go. We had SFPs at the highs, right, which was a nice indicative of overextension for now. That sent us lower. So if you go into here and you confirm, especially the mid of this as resistance again, you will have inverted smiley face. Okay, so if you go back towards, first area to watch for is 3581.34. Okay, 3581.34. That's the first area to watch. You can see support in history, resistance in history, support in history, resistance in history. That's the first line, let's say. If you can confirm that to be support on the lower time frame, you probably get a lower time frame rush back up towards 3,770. That's where you need to be really, really careful. Okay, if you go and reconfirm this as resistance, you're reconfirming the mid of the key inflection area, right, as resistance, reconfirming what was once a supply zone as an area of resistance again. This is where you would not edge. This is where you would hedge a really, really nice short. Okay, so just set some alerts for this level or something, right? So right now, if you're in front of your trading view, just go here, click that plus, maybe just set some add alert right for this level, add alert for this level. If you see that crossing, it's gonna show up for you. Just add alerts for those areas. If sellers are literally showing control, right, sellers are showing you the edge at 3581, there's no reason waiting for higher, right? You take a hedge based on price action that comes in here, but I have a feeling they take it a bit higher. But of course, my feeling doesn't mean it needs to happen. So two key levels, 3581, 3770. That's the general area you're watching for. Because if I go on the 3-day, let me add more context to this. Why this particular zone? You have if I take it like this, your daily supply zone is also within this area, right? It falls somewhere between here. So you have a mitigated liquidity pocket, and then you threaten putting in a distributive structure at your mitigated liquidity pocket. Okay, again, I'm not telling you to go and limit short this area, guys. Okay, I'm not a big limit person, you know that. I like to wait for price action confirmation before being fully positioned ever. If you do decide to limit it, you've been warned, go in with reduced position size, right? I'd rather have confirmation before you go all in, because what could happen is this: if you go up, flip it to support, this structure is no longer in play, right? This is going to send you higher, okay? And you being limited, it just instantly puts you offside. So that's, you know, something to watch for. But the key levels around there again, like I mentioned, 3581.34 and 3770.31 for Ethereum. Okay, those are your key levels to watch for. So again, look, we did not have structure like this last week Tuesday, right? If you go to the daily on Tuesday, what was happening last week, we were literally still, we'd SFP'd this high, right? But the structure was very much still intact, right? In here, it's like, it's a good area to try and hedge a short because it's, you know, rated it's SFP'd around a key level, right? But in terms of actual structure, nothing bearish. But just within 1 week, you can see how quickly structure can change, right? And now structure has the chance. There's a chance for sellers to confirm structures on their side again, momentum's on their side again, right? There's a chance for them to do so. And if they do that, we go on their side. We don't stay stubborn and stay overly bearish when there's no need, overly bullish, sorry, when there's no need to, right? If we get a month, you know, a couple of weeks of downside, we play that to our advantage. But that weekly candle is a bearish engulfing candle, right? That tells us a lot. So again, looking for that distributive structure to come in over there now. So that is Ethereum. Let's look at Solana. Solana, on the other hand, what did it do? Rated all-time high, had a big crash, right? So this massive red box that we had, right, which is what I was saying. Hang on, when did I draw this down? Let me just think. Yeah, right there. So we had a weekly impulse, consolidate, impulse back down, right? So I drew this on last week for you guys. Weekly supply zone, right? Impulse, consolidate, impulse back down. Weekly supply zone just below the key inflection area. So what we were talking about last week, we were saying, okay, if this key inflection area is lost, then look for this mitigated liquidity pocket to fill, right? So we've got that fill now, and that fill also wicked into a demand zone, right? We wicked into the demand zone right here on the weekly. The top of that's what we went to. So you're holding this low, which is why you're pushing back up. But again, now you're below your key inflection area, right? You're not gonna enter a massive swing long or something below your key inflection area. You wait now for this low to be flipped. Well, what you're doing right now, you're battling the mid of your weekly supply zone here, right? Impulse consolidate, impulse back down. You're battling the mid. If you can flip that into support on like the daily or something, over the next few days, we might get impulses higher back towards this key inflection area. And once again, if we get that, right, you guys know where this is going by now. We're looking for that inverted smiley face structure to come in somewhere around this key inflection area. Right, so if I go to the daily, let's find a good area for this to happen at. We have right here, right? So this right here is a daily demand zone. Impulse, consolidate, impulse back up. Daily demand zone right over here. There's an initial area here where sellers showed resistance. You rated that liquidity. So now if you go back into this zone like this, right, and reconfirm this as resistance again, then I'll be looking for Solana around 172 perhaps, right? Maybe even 160 something. Let's see. Wait, this looks like an M shape. One sec. Do we have any harmonics on this? Let's take a look, shall we? Because that's a low. If we do that to this, oh, that's a 382. Oh, hang on. We could very well have a and you know what? It's better to do this. There we go. Yep. So we have a potential 886. Yeah, there we go. Yeah, we do have a potential M shape. Yeah, there. Don't be surprised if we do get this, right? Build support, build support. One flush. How many times have you seen this? Initial support, raid on liquidity, right? Somewhere into the harmonic, and then reconfirmation and go perhaps, right? So if you do go anywhere up towards here or even here, right? So what we have here is a 4-hour, hang on, better to do it on the higher time frame. We have a daily seller zone, locally speaking. We're rejecting off the mid. If we literally keep rejecting off this area, we very well could front from the key inflection area and just go lower. So if you close the daily below this, again, you can start layering into a head short, right? And again, your trigger is very simple. If you flip the low of the key inflection area into support, even flip this level into support, you just exit, right? It's hardly at a risk to yourself because you guys should already be positioned in, you know, Solana, or any of the long spot bags, right? Those should be up. So these are just risk-free hedges we're taking, right? But ultimately, I think it'd be ideal if somewhere around the key inflection area mid is where we actually went and got our rejection, right? So somewhere towards the top of this SFP and then die again. but we do have a harmonic pattern that takes us lower, which has confluence. Again, let's look for, harmonic patterns on their own aren't good, but when the pattern lines up ever so nicely like this, exactly at the mid of this demand zone, it's not to be ignored. Right, so that is confluential area right there. You have the mid of your historical price range, you have the mid of your demand zone. One more drop down on Solana, I wouldn't be surprised. Okay, so look for lower highs to catch a hedge basically on many of these coins. So that's Solana. Injective, again, you bounced off your weekly order block right here, which had confluence with your 2023 12-month macro read buy zone mid 18.482, that key level from history. If you go and reconfirm this gray box as resistance again, right, i.e. this gray box, and especially this area here, even within that gray box, if this is confirmed as resistance, again, that's where you're taking your hedge, right? So wait for the 4 hour to close, daily to close, so on and so forth, right? So slowly layer in. As long as you're below this on inch, maybe you range some more. Maybe inch even goes and gives us a better entry, right? Maybe we get stopped at break even. Maybe we get an even better entry on this in the future. Who knows? But again, below this white box, injective is not going higher. We need to flip this into support. We can talk about $32 inch, $35 inch, and higher. Like I said, peak euphoria. I wouldn't be surprised if injective does hit triple digits. But peak euphoria is not going to happen as long as we're below this white box. Right, very, very simple. So flip this into support for higher, and look for daily in this particular case, in injective's case, right? Again, the scenario I just described earlier, right? Wait for the 4 hour closes in. Okay, that 1 hour just closed. Wait for the 4 hour to close, and if it closes below this level here, perhaps you can initiate a position, 25% or something of your head shortly open, right? And then wait for the daily. If this flips into support, you can close that 25% straight away, right? And you're going to re-enter again at those higher key levels, right? This is an active way of trading, right? And if it doesn't flip into support, you wait for the daily to close under to add a position to your size, right? If you wanted the weekly confirmation, you then wait for the weekly to add that final bit to your size, the weekly close, right? Or you can size up a bit heavier and do so based on lower time frame entry model. So 4 hour close below, open 30-40%, and then if the daily closes below, open 60%, you're fully positioned in a short. And if if it goes high, at that point your average will be in the green anyway because of higher entering. Put your stop loss to break even. If it flips above, you can cut if you don't put your stop loss to break even. But if it doesn't flip above, then you've caught a very, very good risk to reward short. That's a hedge to the downside. Okay, so just an entry model you guys might not be used to taking, right? Because I know most people just set limits, set and forget, right? But in terms of reading price action, there's a load of different ways in which we can actually decipher and enter based on what we're seeing. So that's injective. I'm just gonna go over the top 10. That'll be it, guys. So Vanry, let's take a look at this. Big rate to the downside, right? But thing to note, on the weekly, have you broken structure? No, it's still a higher low, right? That is a higher low. The last lower high, that left lower low has been taken out to put a higher low in. Again, this weekly is going to be important, right? Because we do not want this to close below. If that happens, then this could take us lower. And, we've outdone all the work we put in so far. But if you look at this on the daily, right, you've had a big flush out, but you're holding the key levels you need to. Gray box plus red box. We had this marked down for ages. You're holding it. You're trying to get back up again. So as long as you're above this level, back towards 0.1355, and then after that back towards 0.16, right? Straight up to these levels. You go to, right? So key area for Vanry, you need to hold this area we're in. If not, then I'd fear maybe you're going to go for some massive type to back towards our original entries, basically, right? Another one would get stopped at break even at. But very, very simple. There's no need to overcomplicate it. Above this area, good. If your SFP and start closing below this area, bad, right? Just one line you can put down. Your SFP around 0.1189, you can hedge a short. If you don't SFP here, you don't need to. Where you're currently at a buyer and a seller zone next to each other. That's why you're rejecting here again, around the mid, right? So that's Vanry. Below this, but ultimately below 1189, the line in the sand. If you SFP that area, that's where you hedge your shorts around on Vanry. So we looked at Vanry, we looked at Sol, Inch, ETH, Bitcoin. Let's look at Aptos next. This one gave us a nice correction, straight back to trend. We're not surprised. Your trend is your friend. It is holding. Okay, nothing bearish. Look at the weekly. There is no technical damage done on the weekly. This is for now another higher low. Okay, What we do need to do is flip 9.78 back into support, because after that it's a straight run again towards 11.08. And by the way, if you catch a lower time frame flip, so something like the 4 hours, even the hourly, right? So if you catch this zone being flipped on the lower time frame, you have a really nice risk to reward trade in your hands already. Okay, so you're basically saying, look, I'm gonna cut below this level, right? 1.65, let's say, percent risk to reward. If you get close below here, you're just gonna cut. You're not interested in holding this lower time frame trade, but you're going back towards this area. Ultimately speaking, that's where I look for, right? Because your 1.13 of the shark was at this area. You can take some profits even somewhere around here, right? 4.53 RR, ultimately up here, 8 RR trade. You have an area right now on Aptos where, based on let's see how the 4 hour closes, an area where you can take a risk managed trade. Again, you'd layer in, right? You'd layer in, but you have an area that is very confluential. Look at the area you're bouncing from, right? You're bouncing off your trend, which means if I was to throw the fib speed resistance fans back on, that's your golden pocket right there, right? Because that's the whole reason this was a trend to begin with, right? Golden pockets. So you're back at your golden pocket. If it holds a support, again, higher on Aptos. Look on the weekly, look, low, high, higher low, higher high, higher low, higher high. This could very well be another higher low, right? And then that's just going to give you another higher high. Maybe this time around you actually go and raid 20, and maybe this higher low is actually the one that's going to take you parabolic straight up to raid this wick. Who knows, right? But again, these are, if you weren't already originally into Aptos, right? You were waiting for an opportunity. You've got one. Take a risk, especially above key levels. Take a risk. Just have your stops tight. If you wanted to widen your stops, that's up to you. But then you're no longer looking for those 4 hour entry models, okay? And your risk to reward of 3 is all the way up here. You're completely different time frame, completely different mindset, okay? You're looking to absorb this chart. But if you want precision, then you can drop this down to the 4 hour, the 1 hour, so on and so forth, and then look for those more precise entries, not around this whole structure, but more around this white box. Your frequency of being stopped out is going to increase the lower in the time frame you go. It should be, I mean, that's the general trend anyway, right? But it doesn't matter because your risk to reward is so tight. But again, it's key what's happening here. Let's see, do you have any wave structure for why we bottomed here? We have basically a 886. 886 is 1.13. Actually, no, we went way past the 1.13. Yeah, we went way past that. Never mind. But yeah, again, even in in layman terms, very simple area to manage right here on Aptos. You can see that very well. We can adjust this, to be honest. We can adjust this ever so slightly to account for. Actually, no, I'll leave it like this for now. You can adjust it to account for this wick if you wanted to, but I'll leave it like that. Treat that as a front run. But yeah, Aptos, another one where you can manage your risk really well. AVAX. Demand zone, hit, back at resistance for now, right? Don't enter right now. You're literally at resistance. Very simple. Just wait for that. Very subtle yet very powerful. AVAX is at resistance as we speak, right? But AVAX is another one where if you can go and now reconfirm this as supports, then you're back into this range. Basically, say you're catching a trade to range mid first, and then range highs. Right, and then again, since you've confirmed a weekly high or low, you'd probably go and make another high compared to local price. But if that doesn't happen, and let's say the daily closes like this, the 4 hours closes below, you can start layering into a short for this, right? Or rather a hedge, let's say. You don't have to, again, you don't have to be in 10 different hedge shorts, okay? I would rather you guys hedge short with only one asset than be in 10 different ones, because then it's just going to be a headache trying to manage 10 different, let's say if you have 10 different longs, compound that with 10 different shorts, it's going to be a headache, right? So just size up on one short if you've got conviction, and instead you don't need to be in 10 different, 20, 50 different hedges, okay? So by position sizing, that's what's important. So just choose a few, maybe 1, 3, whatever you want, right? Choose a few of the ones we've gone over today, the ones that's giving you an opportunity. You're at resistance, you're at very clear resistance, right? Take a look. Fair value gap, this is a daily fair value gap. Is it a weekly? It's a weekly fair value gap. It was a bearish fair value gap. You broke above it and mitigated it, and now you're trying to reconfirm this to be resistance, right? So again, this weekly candle is going to be very important on AVAX to maintain momentum. To maintain momentum, I want to close at least, at a minimum, a close above 42.8. Ideally, a close above 43.86 to maintain momentum. Okay, because then we'd be back above resistance. Next week we can, you know, try and attack 50s, right? That's good. If you close below here on the weekly, that is not good. Momentum's fizzled out. You're below resistance. I'd expect a rate of the low, something like this, before eventually carrying up higher. Okay, but that's AVAX. Very simple. Don't need to overcomplicate it. Right? Don't need to overcomplicate this at all. You're at your key area right now as we speak on AVAX. Yo, sup, bro? How you doing? I think I'm just gonna get myself like a new monitor or something for Christmas, bro. I've been wanting these, like, you know, these like 32-inch OLED monitors. There's a new generation where you can basically switch between 4K at I think 120 hertz or something. Oh no, 144 hertz, and then 1080p at like 480 hertz. I'm gonna get myself one of those. Not wanting for much right now. Yeah, I got you, bro. How to spot supply and demand zones? It's more to do with the structure, Lukey. So there's different types, right? But so first, supply and demand zones. Textbook demand zone looks like this. Okay, impulse down, a period of consolidation, impulse back up. That consolidation period is your textbook demand zone. Your modified demand zone looks like this: impulse up, period of consolidation, impulse back up. So you're right in saying support resistance because you know, you want confluence with support resistance to begin with, right? You don't just want a random piece on the chart. You always want multiple confluences with whatever you're looking at. But there's more that goes on with liquidity pockets, right? We're saying, you know, big orders were here, you know, big orders were filled here. We're saying there's multiple different reasons, right? If you apply logic to this, why the consolidation range is your actual support, supply and demand. There's resting bids in this area is what we're saying. So when price goes there, we basically expect an impulse in the direction of whatever type it is. So if it's a bearish, if it's a supply zone that's bearish, when we get a move back into it, we expect a rejection. If it's a bullish one, when we dip into it, we expect a wick up. We expect that demand to come in and eat up the supply. So these are your bullish liquidity pockets, right? Sorry, bullish demand zones. There's different types of liquidity pockets, but this is just simply demand and supply. And you just flip this for your inverse. Your bearish supply zone, textbook looks like this. Impulse up, consolidate, impulse back down. There's your consolidation range, is your supply zone. And your modified bearish supply zone looks like this. Okay, impulse down, consolidate, impulse back down. It's the consolidation range that's your actual liquidity pocket, not the whole structure itself. But that structure is what actually determines is how you know, a spot that this is a liquidity pocket to begin with. Okay, just areas where we'll be expecting resting bids, basically, Lukey. Yeah, bro. I'll be I'm hosting like a nice little private dinner party. I'm a restaurant. No problem, Pilgrim, bro. I'm glad you're enjoying this. Appreciate you guys for being here on Christmas Eve. Anyway, I'm sure you've got better things to do than listen to me ramble on. But that's why I'll keep it short and sweet. We'll go over top 10, and then that's it. All right. So that's AVAX. AVAX again. Look, don't be scared to hedge here, guys. Okay. Because like I said, it does not matter if it gets stopped out if your risk to reward is tight. Be happy. What you should be scared of is taking a trade at a shit place. Do not be scared of taking a trade at the right place, even if you might get stopped out. Okay, it's the risk to reward that matters, right? That's what we're looking to. That's the repeatability. That's the process, right? When you say trust the process, that's the process. The risk to reward. Me telling you to short down here, that'd have been stupid, right? But me telling you to short here, where your risk to reward is impeccable, now it's actually a valid trade idea. Do you know what I mean? Key area. But that's AVAX. Ultimately, all of these higher, I think, I don't think we've topped out in the market. Okay, guys, that's for me personally. I don't think we've topped out yet. I don't see any signs that we've topped out yet. So, say, another one. Okay, say was a nasty dump, but look, weekly maintained, right? And if you were building a say position with me from down here, you're saying what dump, right? But you confirmed another higher low, right? That's bullish. And again, guys, look, say very easy. Below this red box, you have the potential to put a massive inverted smiley that could take you lower, right? So now that you're here, if you start getting 4-hour, daily, and then to the weekly closes below, you slowly layer in on those time frames on your head short, right? But if you flip this back into support, my God, how hard say will run. I am very, very bullish on say. That's the reason it's in my top 10. Everything in my top 10 I'm bullish at, right? Say, even after that dump, look what happened. There's a weekly buy zone that came up. Okay, for those of you unfamiliar with this system, right, it's my own system. What we're saying is, look, up and until these are treated as resistance, there's no reason to be bearish on say. Now you've got an area where buyers demonstrated their willingness to take control, right? So then as long as you're above this, you're going for higher. And if you get a pullback into this, if buyers demonstrate control again, that's the side you go with. So as soon as that weekly close, for example, look what happened, right? So if we go here once, let me take this back, right? As soon as that weekly closed, we had a pullback, right? So this is a bit lower time frame, but if we go to the hourly, we had a pullback over here, and you started to chop, you started to chop, you started to chop, right over here, right there, right? You had a 1 hour buyer zone right there. You kept using that as support, right? And look, sellers tried to take you below, but at the end of the day, you maintained this area support, and more importantly, you went up and you confirmed that you're above, right? Look at that, right? That's a front run. When you see something like this, you're getting confirmation that you're above the area, above the area where buyers took control last week, right? And then that gave you the pump up. So as long as you're above this area, right, you're not looking for lower prices, right? You're looking for higher prices. So currently we're at resistance. We need this to flip, right? You can see that mid is literally pin perfect. You want right over here, very nice level, basically 0.502, right? You want that to be support. That gave reclaim the support. One sec, I just realized there's something I can do here. There's a specific reason I treated this. So another bullish factor we had going into this is this. Okay, so let me do this. There we go. And let me do that. There you go. You can see liquidity triangle, right? Area where buyers have been active. You have not lost it. Very, very confluential area here for say. Super, super confluential. Just want to flip at that red box. I wouldn't take any action if you haven't until we flip that red box. But above that red box, again, I think Seiko is higher. I think Seiko is much, much higher. This was just a reaction of that bearish 5-0, right? So I already described this bearish 5-0 right over here. Do I still have... There was a short I actually gave on stream. It's going to be in one of the streams like previous past. There was a short I gave right over here. That short played out because we never actually got stopped out on that short. Okay, there's a short I gave on this that played out really, really nicely. I've deleted the actual short card from here. It's going to be in one of my videos anyway for the receipts. If you guys want the receipts for that, it's in one of my previous videos a couple of weeks back when this was coming in. So it's basically somewhere around the start of December I gave that short. Basically we had a 5-0, bearish 5-0, right? Bullish M shape. Bearish 5-0. We got a reaction of the bearish 5-0. Now we can take this. If this is a high low, you're putting a high low for the type to return. But we're looking for higher. Say $1.26, very much a valid target. And in peak euphoria, way higher, in my opinion. Right, but let's see. But again, structure is maintained. Higher highs and higher lows are maintained. Okay. So we got 2 coins left, SWI and Ondo. SWI is so bullish. It's actually crazy. Hardly any pullback. That pullback got absolutely eaten up, right? So you went to buy zones, you went to okay, you're gonna get confused by this. So let me why have I done it like this? One sec. Let's do it bit by bit. Okay. Right here. There was your weekly seller zone, right over there. We lost that. After we lost that weekly seller zone, we also had over here, what's this? There is hang on. There must be a reason why I've got this blue one down. Let me just see what that reason is. From this slide. Why have I done this? One sec, guys. This might be one of those, because it's not locked. This might have moved accidentally. Oh no, I know why I did this. Alright, this was your macro buy zone for 9th of December week, right here. So we had a macro buy zone. That's fine. So you're above that level. You're now literally back above. This is so crazy. You're back above your weekly seller zone that you went all the way back below. Right, literally no technical damage done to the chart whatsoever. They're not even letting sellers play about. Then for extra confluence, what did we have down over here? Now this is going to be something more of a lower time frame. So let me turn this off. Right, so it's not confusing. We went over this last week, I believe. It's going to be a lower time frame level, isn't it? Yeah, daily buy zone right over here. Right, massive sell candle that got eaten up. So those are selling pressure came in here following the aggressive buying. Buy showed control here. You went to the 0.5 at that, right? Just went past a tiny bit, but then you look at that reaction of that 0.5. aggressive selling, high volume sell candle, right? Aggressive selling straight above. You now have a high volume sell candle followed by a bullish engulfing high volume candle. This is perfection. So again, you could have a pullback, but that pullback I'd be expecting basically for this 4-hour order block to be filled, right? Maybe somewhere around the mid $3.72 to keep the structure intact, lower time frame, and then just send it higher if you do get a pullback. If you don't, there's no guarantee of a pullback, right? There's no guarantee you're going to get a pullback here. So there's a 4-hour order block. Let me leave that. So I'm going to hide this. Actually, no, delete. There's no point because we've got new data now based off that last weekly close. That I will leave on for now. This I will leave on for now. Delete, actually. We can just draw it on if we need be. Delete. Okay, so I'll leave this on since it's way older data. What I am going to put on now is this fresher data here. Here's your buyer zone on the weekly. Color it blue. So for this week, right, any pullbacks towards 0.5 or anything like this, again, confluence, as long as you're not losing $3.49, you're fine. You don't want to lose this red box. You don't want to actually you don't want to close below and reconfirm this is resistance, because again, inverted smiley structure possible, but as long as you're staying above, especially 390, like this red box, the mid of this order block, so this zone, SWI's just gonna keep pushing higher. Literally, this is one of those, like, you know, it's in price discovery. Everyone's buying this. This is the talk of the town. It's gonna go higher. Okay, so that's SWI. So those were levels we talked about last week's stream, I believe, and before that as well. That's why they were on the chart. But all we can do, have our key levels drawn down, and then wait until one of the key levels actually gives us something actionable, right? Like the actionable area that came out at that 0.5 off that green line we looked at earlier. That's it. But back a range charge, obviously don't take a long here. If you do want to long, you know, as crazy as it sounds, you want to wait for a flip of this area. Okay, if you get a flip of this area, you have an area where you can manage your risk. You would take a long off that. If you don't get a flip, you know, again, if you come up here and you start seeing SFPs, right, or you start seeing closes below, you can try and hedge a short, because you have an area where sellers have demonstrated control on the weekly in the past 2 weeks straight. If you come up here and sellers are once again showing control, let's say off the mid or something like this, same thing, right? You just take a short there, take a hedge. So I want you to do for SWI, guys, if you're looking to hedge short SWI, just draw this seller zone down, okay, like that, and then just that's the levels you're looking at. But that's SWI. Last but not least, we look at Ondo, and I'm done for today. Okay, so Ondo, literally perfection. What did we do last week, right? We dropped down, retested previous all-time highs, right here, if you take a look. 2024 6-month, January, February, March, April, May, June, all-time high, okay? $1.48290, we retested it. Does not get better than that. Retest, insane reaction, grind down some more, and then after that, you know, straight move back to the up. Not straight move up, but like you're grinding up, right? That's a very bullish back test on Ondo. So what are we looking for here? We have now a weekly buyer zone, and this is what I mean, right? Look, the weekly buyer zone was created, and then what happened, right? If I do this, right, the weekly buyer zone was created, and then if you take a look at this, is after that week, you had a pullback to the weekly buyer zone mid 1.54. It was re-regarded as support, right? Look, you retested it, close off. That's a successful retest. So retests like that are where you take your plays off. You have confirmation now, right? You have an area where on the weekly buyer showed control in in previous week, and now once you get a retest of those key areas, buyers are once again showing control around the actual key level. Your stop loss is simple. You get a close below this wick, you cut it. Right? Basically a 1% stop loss here, right? Not 0.9, but basically a 1%. If you wanted to keep it a bit wider, you could put a stop loss below here to account for historic, like, historic wicks you've had. So that accounts for this and this, right? Even then, it's only a 2.30% stop loss, right? And a risk reward of 3 for me, initial TPs, and then after that, you leave the rest, right? Structure like this is what I mean when I say, you get chances always. You don't ever enter on the first pump. You'd always get chances to re-enter. So this is the kind of example I was giving about, like, weekly buy zones have been created. As long as you don't lose these levels, there's no reason to be bearish. But if you go now and turn this area back into resistance, right, like this, and turn this into resistance, that's where you can again hedge a short very, very nicely, right? But that is on there again above this. I don't see why we just don't go higher. So on the weekly now, we also have this, right? So maybe we get a pump up towards $1.88. If you SFP around $1.88, take it very, very seriously. That is your macro read, and it's a bearish candle, so that's a bearish macro read level. So for now, we're saying resistance, right? If you flip that to support again, you're going back towards $2.14, right? But if you don't flip it to support, you SFP, close below, you can try and take a head short up here. You'd either take a head short up there, or if you go and start turning $1.61 and stuff back into resistance. Those are the two reasons you take a head short on Ondo. Right now, I wouldn't really do much on this. Yeah, not really. But that is the top 10, right? That is the top 10. I know what bookmark is, but I used to use it a lot. The bubbles is a very, very nice way to display data. For actual heat maps in terms of liquidity, there's a platform called hang on, at the top of my head, it's one I came across recently. It's called like Spread Fighter or something like this. It's free, I think, but you should be able to use that. But yeah, liquidity is a nice confluence to have, right? That isn't your liquidity lines, whatever. That's not your end or be all. There needs to be context to why you're looking at heat maps to actually get liquidity. No problem, Aki. We went over Vanry earlier, maybe in the recording. But hang on. No problem. Let's look at XLM and I'll be done. Okay, for my bro. XLM USD. Still in my long from this. Okay, my long was down here for this one. Key level, we had this marked out. Why is this a key level? You flipped T1 of the harmonic. Okay, for those of you unfamiliar with harmonic patterns, here's your T1 zone. This is your first technical target for the harmonic, this zone. Okay, you're flipping into support, you're above the B point. As long as you're above this, your next target again is going to be up here on the higher time frame. Of course, now lower time frame wise, you might be something different. So you have a range. So here's your range. The reason I'm treating this as a range is because for me, this is manipulation attempt. So is this. You can see that. Rejection of the range for now. Right, so again, I wouldn't long this right now, bro. If you could flip that into support, then yeah. This is the area where you put a smiley face in before. And this is also the area where you put inverted smiley in before. Right, so these are your true range highs and lows, the way I see it. Flip that into support, you can now long XLM. If you don't flip that into support, you've got an area where you can try and take a hedge. Maybe you get a pullback towards here before you go high. But that's going to be a lower time frame trade. I would not recommend trading XLM on the lower time frame, obviously. So if you get the daily close below like this, then maybe we get one more drive into this area before going higher. But to long this specifically, I'll just wait for a flip of 41126, basically 0.411 into support. You can flip that into support, you're back within this range, you're targeting range highs again. Or at least the mid, right? But you can look for that 1 hour entry model. You're going to get a really nice RR trade from here to here. You can size up on that really well. But ultimately on the higher time frame though, where it actually matters, this is massive move up. This is for now, so far this is a bullish back test, right? You've flipped your terminal 1 zone on XLM. Your A2C is still here, okay? And your range, extreme range high, so all the way up here, 93 cents. So if this is, again, you have a weekly buyer zone over here. As long as this doesn't get violated, you're all good. Higher prices. I don't see any reason for us to actually go lower now, right? Because I don't see XLM selling off all the way to 19 cents again. So I think we chop around here for a bit and then go higher. But of course, if we start flipping the mid of this, the 0.33 to 0.34 into resistance, then it could definitely go all the way back here. But seeing the reaction we got on the weekly from that level and how currently we're trying to recapture B, for now, I'm not going to be worrying about levels all the way down here around 19 cents, right? If we can flip this into resistance, then maybe we get a chance to recompound this back down over here. Otherwise, I'd expect higher, bro. 363, yeah? Nice entry. But yeah, guys, so that's it. I don't want to keep today's stream too long because obviously, Christmas Eve and that. One thing I do think we went over this last week. PAL, very nice reaction off that great box. This is what we were talking about. It's either the last week or the stream last week before that I was saying I'm in this. If you want to enter, wait for the retest of the grey box. We got a actual perfect retest of that grey box. We're up huge from this. I recompounded on this one, 93% up on this one. Still within your range as well, right? So this thing's gonna go much higher in my opinion. This is my AI play. You know, a few render, PAL, so on and so forth. One of my AI plays is PAL. Structure is so clean. The reason I took this trade, originally I took this down here, and then I compounded this over here. So M shape, harmonics, you know, I love those. Fib fan 0.94, so extremely over extended to the downside. AMD model, PO3, basically accumulation, manipulation, quick, swift. What you want for a manipulation, went in to take out liquidity pocket. Again, that's what you want. You went into a 3-day demand zone, and then, you know, recapture and went up, right? Now you literally shifted structure. You took out the last lower high that led to the lower low, right? Last lower high that led to the lower low, which is right over here, by the way. Not that, sorry, this. You took out that lower high that led to this lower low. You also took out this lower high that led to this lower low in the past, right? So this key resistance taken out of. Again, if you're going from a downtrend to an uptrend, you're simply waiting for the last lower high that led to the lower low to be taken out, and then for a high low to come in. The high low can be deeper, it can be above, it can be at the level, doesn't matter. You're just waiting for a high low. You got a high low deeper in this case, right? At a level we already talked about in the past. So now you're back at T1, you flip this higher, right? So PAL, insane reaction. Just wanted to finish off with that, in case anyone did actually set alerts for this level. From, it was either last week or week before. It was one of those streams, but we did go over this one. Again, if you're not in, doesn't matter, right? Look, this thing at the end of the day, it's not gone parabolic yet. Ideal entry, of course, missed, but you get more chances, right? Let's say if you flip T1 into support, this, you flip 0.353 into support, you look for lower time frame entry models, but you get entry models nonetheless to ride it higher. Okay, not the end of the world, but the ideal entry zone, that's missed now, right? There, and there. But yeah, that'll be it from me, guys. Didn't want to spot position. 15 in total, Sky. My top 10 plus a few ones I rotate in and out of. Depending on the size of your portfolio, you're going to increase that number or decrease that number. Okay, you can have like a 7-figure port and still only be in 2 or 3 things. But I like to be, I want to be a bit diversified this cycle. So I'm like, my top 10 I already go over, of course, and then apart from that, just like a few memes and stuff. Apart from that, everything else I'm doing trading wise, I've got way more positions, but that's leverage, right? So way less position size than spot. Now I'm just trying to capitalize on everything going up, right? That's the point of leverage for me. So I'm in like 69 different swings on my leverage account, and then scalping is completely separate. Diversification. So what's in my top 10, and what's in my top 10, and then after that, just a few memes. No, not really. Your name is blocked out for me, bro. Funding rates are only going to be expensive if you're literally laddering in all the way through this range, right? So if you execute here, take some profits here, recompound, which is what I'm doing with swinging basically, funding isn't really that much of a problem. It's not. This for example, PAL is a trade that is only a couple weeks old, right? For swinging, that's perfectly fine. Because it's like this, right? If I'm scalping, then you're in and out, right? You're in and out, you're in and out. With swings, obviously, the longer time frame is in mind anyway, right? So your position size on the swings is so that you're not trying to position heavy, right? That is for my spot, right? Heavy on spot. For my leverage swing account where I've got all those positions open, I'm not trying to enter heavy on those, right? I'll go like, you know, let's say 50x leverage, 75x leverage, like $50, $60 position size, not much, tiny for each different play, right? The profit for those is going to come when you hit those, you know, 200, 300, 400 X's. For this, I just want positions. I'm going to TP at key level. So this is my leverage account is basically going to be like my bank, right? It's my money printer. If I need money for a spot, I would take profit out leverage, pull it out. If I need money for some trips, for presents, for whatever you want to do, just take it off your leverage account. That's all it's for. Just extract value on the move up. Otherwise, you just leave it. Otherwise, I'm just leaving money at the table, you know, right? So just like to be diversified like that. Oh, so in terms of port size, I'm like 80% in my top 10. 20% is for everything else. Yeah. So for my swing, it's the ones I've been sharing on Twitter. They're 5x's, right? 5x swings. You don't need leverage, just a tool. Doesn't matter. It's a magic number, right? Position size is what matters. Yeah, so for me, I'm doing 5x. Yeah, spot hole kind of thing. Yeah, you can do leverage 1x, right? People seem to not realize this. You can 1x leverage if you want. There's no point in doing this because at that point you might as well go spot. But where this does come in handy, what I tell my students all the time is, look, if you didn't make money on the way up because you're new, but you're learning right now, it doesn't matter. You'll make some money on the way down because I'll tell you when I'm switching to shorts. If you don't want to leverage, right, you want the lowest risk possible, you can do 1x leverage shorts, right? So that's basically like you're shorting with spot. Of course, you're still holding collateral, you still have to pay funding, but 1x leverage, you're not going to be paying much, right? So, you could size up and then it's like having spot, but you can do 1x leverage to the downside. That's how you make money on the way down as well. Or you can do 1x leverage. It's thing. Yeah, for sure, bro. No, you too, bro. Have a good one, man. And just keep in touch in DMs, brother. Just reach out if you're interested, bro. Just reach out if you're interested. Merry Christmas, guys. Merry Christmas Eve to all of you. Merry Christmas Eve. No, Merry Christmas and Happy Christmas Eve. But yeah, if you guys do want me to look at any charts, by the way, I just put it in the chat and then ping me. Whatever request you have, and once I see a ping, I'll get back to looking at it, and I'll get back to you ASAP, basically. But yeah, guys, I'll end this here. I'll end the recording here.